largest cryptocurrency by market cap, Bitcoin is stabilizing above the $105,000 level, despite a 30% drop in its price just 3 days ago. Over the past day, Bitcoin has seen a lot of volatility, ranging from a low of around $101,000 to a high of around $112,000. This price action comes amid a flurry of whale activity. Data from the on-chain analytics platform, Sygnum reveals that some giant crypto whales are taking profits. In fact, 2 whales with balances worth over $500 million each moved their coins off an exchange. In detail, one of the wallets moved $546.28 million worth of Bitcoin, while the other transferred $514.3 million worth of the crypto. Both of these whales initiated their transfers via the Bitcoin network, and both of the addresses involved in the transactions are non-custodial wallets do not belong to any exchanges or financial institutions. Rather, they belong to individual crypto holders who have control over their private keys. As such, these wallets typically offer higher security than custodial wallets. Although we don't know where exactly these whales are transferring their coins, it is likely that they are moving their funds into cold storage. Cold storage refers to offline digital wallets that are not connected to the internet. It is generally considered to be the safest way to store cryptocurrencies, because it reduces the risk of hacking. By storing their bitcoins in cold wallets, these whales can more securely hold on to their crypto assets. It is also worth noting that while one of these whales transferred a slightly larger amount of Bitcoin, the other whale transferred a slightly larger amount of money. This is because the price of Bitcoin was higher when the first transfer took place. This recent whale activity comes amid a broader trend of wealthy individuals accumulating more Bitcoin. In fact, data from Glassnode reveals that the number of Bitcoin wallets with a balance of at least 100 coins hit a new all-time high earlier this week. In the context of Bitcoin's latest price rally, this suggests that many crypto investors are holding on tightly to their coins. In other words, just like the whales, many Bitcoin holders are choosing to take profit, but only partially. Just 3 days ago, Bitcoin's price dropped by nearly 30% due to profit-taking and mass liquidations. But since then, the cryptocurrency has recovered almost all of its losses. Bitcoin's recent price action indicates that the cryptocurrency is maturing as an asset class. This maturity is also reflected in the growing number of institutional investors gaining exposure to Bitcoin through various investment products. According to data from the crypto data aggregator B, institutional investors have added over $1 billion worth of Bitcoin to their holdings in just the past 2 weeks. This buying pressure is likely what has pushed Bitcoin's price back above the $105,000 level today. To be sure, Bitcoin's price action will likely remain volatile in the coming days. The cryptocurrency has a history of seeing sharp price movements followed by periods of consolidation. It is possible that this is what we are seeing right now. That is, Bitcoin's price is consolidating after a sharp rally. What's more, Bitcoin's price is still far from its all-time high of $69,000, so there is still room for further upside. Of course, this is just speculation on my part, and the price could just as easily drop as it could rise. That is the risk of investing in such a volatile asset class. Be that as it may, Bitcoin's recent whale activity is a positive sign for the cryptocurrency's long-term prospects. As more wealthy investors accumulate Bitcoin, the asset's price will likely continue to rise over time. With that being said, what do you think about Bitcoin's price action? Let me know in the comments below. If you enjoyed this video, please feel free to leave a like. And if you did learn something, please feel free to leave a comment. Thanks for watching.